So, you did it. You worked hard, paid your bills on time, and you finally broke into the 700 credit score club. You're probably feeling pretty good right now, and you should be. But what if I told you that your 700 score might actually be costing you thousands of dollars? I remember when I first hit 700. I honestly thought I was set. I walked into my bank, all confident, and applied for one of those fancy travel rewards cards I'd seen all over social media, and I got denied. Just flat out rejected. That was a rough wake-up call. It's when I realized the hard truth. In the world of money, a good credit score just doesn't cut it. So today, we're going to break down the top-tier perks you're still missing, the sneaky ways a 700 score is draining your bank account, and the exact game plan to break into the 800-plus club, which is where the real financial magic happens. All right, so let's get one thing straight. Hitting a 700 credit score is a big deal. According to FICO, anything from 670 to 739 is officially good credit. You've probably already seen some of the perks. You're getting approved for decent loans and credit cards. Maybe you snagged an apartment without a hitch. And the offers you're getting are way better than what someone in the 500s or 600s is seeing. Lenders see you as a pretty responsible person, and doors that used to be closed are now open. You've earned the right to feel proud of that. But this is the comfort zone. You've climbed past the national average and you're what they call a prime borrower. You can get conventional mortgages, car loans, all that good stuff. But this comfort is exactly why it's so dangerous. It makes you stop pushing, and the next level is where you can actually start building serious wealth. Now for the part they don't really advertise. That good score can be like a leaky bucket, slowly dripping money out of your pocket, month after month. First up is the interest rate trap. Yeah, your rates are better than average, but they are nowhere near the best. The absolute rock bottom interest rates are saved for people with scores of 740, 760, or even higher. Let's make this real with a car loan example. With a 700 score, you might get an interest rate around 6.7% for a new car. But somebody with an 800 score? They could be looking at a rate closer to 5.2%. On a $40,000 car loan over 5 years, that difference will cost you over $2,000. And on a mortgage, the gap is just terrifying. A seemingly small difference in your rate can balloon into tens of thousands of dollars in extra interest payments over the life of the loan. Second, you're locked out of the world of elite travel and premium perks. Those super desirable credit cards like the Chase Sapphire Reserve or the Amex Platinum are status symbols for a reason. They come with huge sign-up bonuses, access to airport lounges, hundreds of dollars in travel credits, and automatic hotel status. While they don't list an official minimum score, pretty much everyone agrees you need a score deep into the very good range, think 740 and up, to even have a shot. With a 700 score, you're on the outside looking in, missing out on thousands in real value every single year. And finally, a 700 score is just fragile. You have way less of a buffer. 1 or 2 late payments, or a single month where you rack up a high balance could knock your score right back down into the fair category. All your hard work, gone in a flash, and borrowing gets expensive again. An 800-plus score, though, can take a small hit and not even flinch, keeping you in that top tier. Look, getting from 700 to 800 isn't luck. It's all about strategy. Here are the steps you absolutely have to take. First, your credit utilization ratio is king. The standard advice is to keep your balance below 30% of your credit limit. Want the pro-level advice? Keep it under 10%. Here's the trick. Pay down your balance before your statement closing date. That way, a super low utilization number is what actually gets reported. Second, your payment history is everything. A single 30-day late payment can absolutely destroy your score. The solution here is dead simple. Automate everything. Set up autopay for at least the minimum payment on every single account you have. No excuses. Third, think about becoming an authorized user. If you have a parent or a trusted family member with a long, perfect payment history and a high credit limit, ask them to add you as an authorized user on one of their cards. You don't even have to touch the card. Their amazing history gets added to your report, and can give your score a serious boost. And fourth, do not close your old credit cards. A huge piece of your score is the average age of your accounts. When you close an old card, you shrink that average age, and your score can take a nosedive. Just keep it open. Maybe put a small subscription on it like Netflix and, you guessed it, set it to autopay. Hitting a 700 credit score is an awesome achievement, seriously. But you have to see it as a launch pad, not the final destination. It's the difference between just getting a loan and getting the best loan that saves you a ton of money. It's the difference between watching other people travel in style and being the one who gets the airport lounge access and free upgrades. Thanks for watching, and I'll catch you in the next one.